Well, it's time to take a look at the weekly commodity markets now with Darrell Holaday, Country Futures in Frankfort, Kansas. Darrell, coming here into the close on a Friday, definitely seeing a little bit of profit taking. Grains, livestock, all closing in the lower. Are you seeing traders wanting to move more to a cash position as similar to last week when we talked still plenty of uncertainty in the world?
Well, that's certainly the highlight is that this, sometimes I think one of the things that we probably don't talk enough about is that in the markets, when we get in a situation like this, a lot of people run to the sidelines, as you said, and kind of go to the cash. I think that's fair in a lot of markets. I don't say that. I think in the general sense, you just lose participants. And what happens with that is the volume drops, and then you get a lot more volatility because you just have less participants. So it doesn't takes a big order one way or the other, buy or sell, and we really move, and we move the market. And I think we saw that certainly in the livestock sector. I think we're seeing it somewhat in the grains. We saw a little different situation on the grain side this week, and we continue to see the strength in the soybean complex. And that really was cash-based early, especially as we saw the basis levels move higher. We've definitely got back past the peak in the soybean harvest, and so we're in that back half of the. We're in the back half of the corn, but in the soybeans we're probably in the back quarter. So lot of profit in the soybean crushing going on. So they're more than willing to push that bid higher as the meal basis continues to be strong and meal prices higher. But the soybean oil market really, really struggled. Once again, I just remind people, for all the talk we talk about this renewable diesel, the demand is not there. The market's telling you we don't have the demand there because it can't even. We have a hard time even now holding the 55-cent level, let alone the 67-cent level. But the soybean meal market is very strong, and good export business on the upfront. On the beans, we're behind where we need to be, but there's been some good export activity that supported the market. Then late in the week, just all of a sudden out of the blue on Thursday, we saw a big rally in the corn, and we saw some fund buying come into that market. It tended to go away on Friday, but we got early Friday, we got the December corn up near the 510 mark, a couple ticks below it, and then we reversed on Friday and ended up with just slight gain in corn on the week, even after at one time being up 15 to 16 cents just on Thursday and Friday. So nervous markets, low volume markets. I think you're absolutely describing it well. The wheat just kind of followed the corn. It acted like it wanted to rally. We are going to see a weather pattern change in the middle part of the country and even the Midwest next week. Definitely a wetter, but certainly an increased chances for precipitation. I think that's twofold. Obviously, hard red winter wheat area would like to see some decent rains again. And at the same time, as it moves, if we can see some move over the Midwest and help those river levels out, that would actually be supportive to the grains from the standpoint that we could maybe lower some of these barge rates if we get those river levels to move higher. We're a long way from that happening, but you got to start somewhere. And I think there's some thought that maybe next week's certainly watch that pattern or those systems coming through next week possibly do move it. But in the big picture also, the nervousness around the Middle East and the strength in the energy market, kind of a mixed bag for the grains because the strength in the energy and oil, which was up over $3 this week after a rally late last week. So we're up about $7 since the situation in Israel and Gaza, and that has certainly added to that at times helps the corn and the soybean markets as a whole. December corn on the week up 2 cents at $4.95. March corn $5.09 up a penny. November soybeans up 22 on the week at $13.02, but about 17 cents off the high of the week. March soybeans up 18 at $13.31. It should be noted that both in the corn and the beans, one other thing that happened, if you notice even the changes, is that the structure changed a little bit in the front end of the market, especially in the beans, outgained the back end. If we took some of the carry out of the market, there's still carry in the market. That's always a good sign, at least a better demand sign that you're seeing strength in the front versus the back. That was true in corn most of the week until it gave up a lot of that ground on Friday. Livestock, just a complete liquidation in the meat complex all week in the futures side. And I would stress to you, this was a futures liquidation. You'd probably feel a little bit different if the cash market was in trouble and it led the market lower. Not true. Cash was higher, $1, $2, $3 higher. Depends on what you want to use, what you want to compare. But there's no doubt it was higher. But at the same time, the futures just couldn't hold rallies. It just continued to work lower. that's after a higher market early in the week. We have really drained the premium out of these futures contracts versus the cash or versus the front end. We were carrying $6, $7, $8 premiums into April, those February and April contracts at one time on the live cattle. You saw the feeder cattle were carrying $10, $12, $14 premiums over the cash index. Those have gone away. The cash index has dropped substantially down to that 42, 43 area. On the feeder cattle side, the cash cattle have went higher, but a lot of the reason we've drained the feeder index is because we've seen some of the premium come out of the deferred contracts on the live cattle, and the market just was under pressure. I think a lot of this was macroeconomic concerns. Yes, there was concern about the cattle on feed report. Yes, but it's just one report to see what we were going to have on Friday. I think it was deeper than that. I think we've had a lot of funds that have pulled their money out. There's a lot, once again, because when you get in these nervous markets, I don't want to be long anything. But then we throw that in with the Fed chairman on Thursday indicating that inflation is still a real problem and they're going to have to fight it. And the reality is they're going to continue to fight inflation. They're going to, and he made the comment, we're going to have to slow economic growth to basically slow it dramatically, which basically may be a sign of we got to take it into recession. And the reality is, as an economist telling you, he's telling the truth because he only has two tools in his bag. One is interest rates, which he continues to raise higher, and the second is monetary supply or money supply, which he continues to try to reduce. He doesn't have control over fiscal policy that spends a lot of money. He hasn't even control over energy policy, which has gone all about climate change, and we've seen crude oil prices go through the roof and gas through the roof. That the energy sector, electrical bills, all moving. All inflationary, and he doesn't have really any control of that, and he's trying to do something to calm down inflation. And so his only method is to try to slow the economy to a crawl. In reality, we're kind of in that stage. We're seeing somewhat stagnant growth and still inflation. And the hogs just continue to see that. They followed that weakness in the hog cattle. I don't know who was leading who lower. This week, the cash index continues to move lower. The pork cutout goes lower, and it's well beyond the seasonal bottom. We're sitting here at about a 38% drop from where we were on the high on the cash summer index. If you look at these hogs versus that, that seems like too much, but the hog numbers are also a little bit more than we anticipated off the Hog and Pig report. So the market just continues to sell off. I think actually is spurring additional liquidation in the breeding herd. On the week, October cattle at 184.27, down 85. December cattle 212 lower at 184.62. October feeders 241.82, down 8.05 on the week. But those November feeders were down 10 1/4 at 242.22. December hogs $66 even, down 3.50 on the week, and the February hogs 3.75 lower, closing at 70.42.
And that is Darrell Holaday with Country Futures in Frankfort, Kansas. You can always learn more when you give them a call, 1-800-292-4038. Do remember, though, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing. And that's a look at your weekly commodity recap here on the Rural Radio Network.